PS7 is entitled Statement of Cash Flows. Basically, what we will be discussing here is the inflow and outflow of cash. Statement of cash flows is one of the components of financial statements. It summarizes different activities of an entity, namely operating, investing, and financing. When we talk about statement of cash flows, we are summarizing information about cash receipts and cash payments of an entity during a period. It is presented as an integral part of the financial statements for each period for which financial statements are presented. If you will be asking what is the primary purpose of the statement of cash flows, the purpose is to provide relevant information about cash receipts and cash payments of an entity during a period. The statement of cash flows is designed to provide information about the change in an entity's cash and cash equivalents. So yung cash and cash equivalents is a line item presented in the statement of financial position. Cash comprises cash on hand and demand deposits. Cash equivalents are short-term, highly liquid investments that are readily convertible to a known amount of cash. Pag sinabi natin how short ang term ng isang cash equivalents, the investment must be acquired 3 months or less before the date of maturity.
So these are the examples of your cash equivalents. You have a 3-month BSP Treasury bill, 3-year BSP Treasury bill purchase 3 months before the date of maturity, a 3-month time deposit, and a 3-month money market instrument or commercial paper. So very evident yung rule about the 3 months. Next is the classification of cash flows.
What are the classification of cash flows? There are 3 activities involving cash. They are first, operating activities, second, investing activities, and third, financing activities.
So let's talk first about the operating activities.
Operating activities are the cash flows derived primarily from the principal revenue-producing activities of the entity. In other words, operating activities generally result from transactions and other events that enter into the determination of net income or loss. So considering the definition, we can safely say that if the transaction pertains to revenue-producing activities as well as those related to expenses incurred in order to come up with the revenue, itong mga activities na ito, any cash involved here is classified as operating activities. But in addition to that, transactions pertaining to trading securities are also classified as operating activities, which means if there are purchase and sale of dealing or trading securities, you will include that as part of your operating activities. Aside from that, if you are a financial institution, cash advances and loans made by a financial institution are usually classified as operating activities since they relate primarily or they are considered to be the primary source of revenue ng isang financial institution. Investing activities are the cash flows derived from the acquisition and disposal of long-term assets and other investments not included in cash equivalent. As a simple guide, investing activities include cash flows from transactions involving non-operating assets. So basically, based on the definition, lahat ng pag-acquire or pag-purchase at lahat ng pagbebenta or pagdi-dispose ng long-term assets. Ano yung sample ng long-term assets natin? We have your property, plant, and equipment. We have your intangibles. So lahat ng pera na pumapasok or lumalabas involving those kind of assets will be presented as investing activities. Financing activities are the cash flows derived from the equity capital and borrowings of the entity. So ang tinutukoy dito, saan nanggagaling ang pondo na ginagamit ng company para i-finance yung kanyang business. So dalawa yung pwedeng panggalingan, either kumuha ka ng capital from your investors or manghiram ka ng capital sa creditors. That's why financing activities includes transactions resulting from equity financing, that is between the entity at saka yung owners, and debt financing, that is between the entity and the creditors.
So these are the example of cash flows arising from financing activities. So based on the items included here, it involves shares, ordinary and preference shares, as well as payments of the amounts being borrowed, also payments by a lessee in the case of lease liability.
What is the treatment of non-cash transactions? PAS 7 provides that investing and financing transactions that do not require use of cash or cash equivalents shall be excluded from the statement of cash flows. So ang simpleng explanation dito is that dahil non-cash transaction siya, ibig sabihin, walang inflow or walang outflow na cash na inaasahan, therefore, hindi natin siya dapat isama sa pag-prepare ng statement of cash flows. Now, ang sunod na tanong ay, are we going to ignore it totally? So the answer is no. Non-cash investing and financing transactions shall be disclosed elsewhere in the financial statements. Ibig sabihin, i-disclose natin pero hindi sa statement of cash flows.
So these are the examples of the non-cash transactions, like acquisition of asset by assuming directly related liability. So meron tayong asset dito, meron tayong liability, pero wala tayong cash involved.
The question is, how are we going to classify interest in the preparation of the statement of cash flows? Dalawang pinag-uusapan natin pagdating sa interest. It's either interest paid, nagbayad ka ng interest, or interest received, nakatanggap ka ng interest. According sa PIS 7, ang first presentation or classification ng interest ay operating cash flows. Also, kapag ka nasa financial institution ka, operating cash flows din ang classification ng interest payment and interest receipt. However, merong alternative presentation na pinrovide ang standard. Ang sabi, interest paid can be classified as financing cash flow and interest received may be classified as investing cash flows. Pag-usapan natin yung alternative presentation ng interest. Ang interest paid classified as financing cash flow. So bakit ganun yung presentation? Kasi usually, nagbabayad tayo ng interest kapag ka nangutang tayo. And kadalasan, yung inuutang natin na binabayaran natin ng interest ay ginagamit natin in order to finance our business. On the other hand, yung interest received naman is classified as investing cash flow. Kasi commonly, nakakatanggap tayo ng interest as a return on investment. Yung tipo na nag-invest tayo in a long-term investment and eventually, naka-earn tayo ng interest. Pag-usapan natin ang presentation ng dividends sa statement of cash flows. Dalawa yung dividends na tinutukoy dito. Isang dividend received at isang dividend paid. Let's go first with the dividend received. Ang first classification ng dividend received ay operating cash flow. The reason, it is used in determining the net income. The alternative presentation is it is classified as investing cash flow. Bakit? Kasi nakakatanggap tayo ng dividends as a return on investment. Kapag ang kumpanya ay nag-invest, for example, sa stocks ng isang kumpanya, makakatanggap siya ng dividendo. So in that case, yung investment is part of investing activities. The other hand, kapag dividend paid ang pinag-uusapan, its first classification is as financing cash flow. So bakit? Kasi usually, nagbabayad tayo ng dividends sa ating mga stockholders. At yung stockholders natin, under siya ng financing activity. Okay, it's the transaction between the company and the owners. Alternatively, yung dividend paid natin may be classified as operating cash flows. Why? Because it assists the users in determining the ability of the entity to pay dividends out of operating cash flows. PAS 7, paragraph 35 provides that cash flows arising from income taxes shall be separately disclosed as cash flows from operating activities unless they can be specifically identified with investing and financing activities. Tax cash flows are often difficult to match to the originating underlying transaction. So most of the time, all tax cash flows are classified as arising from operating activities.